Welcome to Channel Amic, your insight to the Australian visa system. Good day everyone, my name is Carl Young, your online YouTube visa consultant. Now I'm interested about migrating to Australia. Make sure you subscribe to our channel and turn on a little bell on the side, so once we have all the updates and news like today what we have, and you have all the insights. Now obviously a lot of people might already be notified through media, and also I put it into my social media as well in regards to a news article reporting the Minister of Immigration or what he has announced yesterday. Now, I think it wasn't officially in a Home Affairs website, but it was on a newspaper in some sort of conference. So it was it came out late yesterday, so I had a little bit of digest of the content, and today I would like to share these news with you, especially if you're looking to invest into Australia, and of course getting a visa there in conjunction to your investment as well. So let's take a look what is like and what was the content of the news. So this came out from Financial Review, and the title, as it says, business migrants needs 1 million more to secure investment visa. There are some rumors out there talking about how this new investment visa could actually allows investment migrants to actually get permanent residency sooner. However, from my view, it's not as what it seems, because I think what they have done is they compare to the wrong category of visa within the investor visa programs. Anyway, let's have a look what it is. Okay, so this came out from May 19th. Now today is 20th. It was actually 12 a.m. That's very interesting. Anyway, it came out yesterday. The news is from yesterday. So investors will need to stump up extra 1 million to gain visa to live in Australia under the shake-up of migration scheme aimed to encourage higher quality in local businesses. Now, whether that will actually encourage local business, that is another topic there. The change to be confirmed by Immigration Minister Alex Hawke on Wednesday to take effect from July 1st. Now that's very important. Will also shorten the length of time investors will have to wait before they can apply permanent residency. Now whether or not that's true, let's take a look. Okay, so the demand of visa under Business Investor Investment Program, BIIP, that's how we will call it. And that's how the industry called it now, has been exceeding its supply before COVID-19 pandemic, with more than 15.9 billion invested into Australian economy since 2012, and that's huge, and that is humongous. Now the problem that we have at the moment is that the delay is causing due to the pandemic. But anyway, let's read on. Australia is an attractive destination for investors, and these changes will directly benefit emerging enterprises and the commercialization of Australian ideas, research and development, Mr. Hawke said. Increase investment threshold and the adjustment of investment ratio to focus more on venture capital. Interesting. And private growth equities, or PE, will better support innovation emerging enterprises in Australia. Now, move on under the change, the amount of business person need to invest under investor stream. Now, that's what they are talking here is 1AA-B. Now, used to require to invest $1.5 million into a state treasury bond. So now they have increased from 1.5 to 2.5, so 1 million more to gain a visa. Okay, and the significant investment stream threshold will remain at 5 million. That's SIV. So 1AA-C remains the same. So the only changes here that we're talking about is 1AA-B. They bumped it up from 1.5 investment threshold up to 2.5. Okay, now the venture capital and private equity component of the compliant investment framework. Now that's what we are talking about in SIV. So the compliant investment framework, that's SIV, within the $5 million investment. 1AA-C, which governs the amount investors need to invest, will increase from 10 to 20%, and with a further 30% deducted to emerging companies. So that they require the investment ratio into a VC has increased. That's what they're trying to say here. Okay, the balancing investment component will be reduced from 60% to 50%. The balancing investment component, that's the general component. So it used to be 60%, which you can choose to invest whatever you like, or whatever the VC choose to do. Now they are required to reduce that to half and put the half, 20%, to a venture capital, emerging businesses, and 30% to the emerging companies. Okay, so that's what they're trying to say here. Currently, some investors have to wait up 5 years before they can apply for permanent. I'm not too sure what this actually dictates. I don't know where that statement coming from, because generally 1AA, you get the initial one is you get 4 years of temporary visa. You conduct business for 2 years, then you can apply for permanent residency. And the 1AA-B and 1AA-C, all you need to do is invest and wait for 4 years. I'm not too sure what they're trying to say about 5 years. Don't know. Never happened. Anyhow, unless you did not accomplish what you're required to do in your first 4 years, and you need to extend your visa and continue on to 5 years. So I'm not too sure what they're trying to say here, but the current system is 2 and 4. Now, anyway, let's read on. But the change of the BIP visa holder will be applied per resident if they meet the requirement of that stream after 3 years. Will have up to 5 years to go to do so. So I think what they're trying to say here, but we need more clarification here. I think what they're trying to say is rather than have 1AA 2 years, 1AA-B and 1AA-C 4 years, are they pulling all together to 3 years? I don't think that's totally right. So anyhow, there's still ambiguity within this news here. So because currently I don't see any BIP program required to go up to 5 years. Anyway, there's another news. Let's read on this one. This one is from where is it? Okay, this one is from Innovation Australia, Public Policy and Business Innovation. So it should read government ramp up investor visa requirements. So there's only that one there. So I think what they're trying to say is for investor visa 1AA-B, rather than 1.5 million for 4 years, they are proposing 2.5 millions for 3 years. Now that's fair. However, let's move on, as we haven't really seen the actual law, because in the news there's still a lot of ambiguity there required to be verified. Again, this news came out from 19th of May. Investor visa holders, now that's 1AA-B, that's what they're trying to say here. Australia will have allocate at least half of their funds to local startup and emerging companies. Now, again, that half, what they're trying to say, so there's a lot of media news reporters, they don't obviously they are not expert in visa and the regulation and law, so they have mixed up investor visa, whether that's 1AA-B or 1AA-C. So what I think what they're trying to say here is 1AA-C, because half, that means 50%, as we saw from previous news article, that should be 50% ramp up to the BIP program. So that's $5 million or 2.5 required to go to emerging and startups. Okay, and that's 1AA-C, so not 1AA-B. Okay, another change, investor visa holder will require to invest 20% of their funds, and 1 million investor and 1 million of significant investor holders into venture capital. So that whole thing is talking about the 5 million SIVs. That's why 50-50 there. The reform were flagged by the government altered scheme in 2015 have been originally promised by mid-2017. Anyway, that's been taken a long time. They're now coming in effect in July. Same time, number of other reform of big program, including slashing visa scheme from 4 streams, so business, innovation, entrepreneur, investor, and significant investor. So there's only 4 you can do. There's no 1, 3, 2 anymore. Under the current compliant investment framework, investor visa holder must invest 5 million. That's SIV of the minimum. 500,000 invested into VC and equity funds, 1.5 into emerging eligible fund, managed fund, and listed investment company, and the remaining 3 to other whatever it is that the fund wanted to invest into. The new changes will require for both investors and significant investors stream now invest 20% of their fund into a VC and private equity. Doubling current level, a further 30% invest into emerging company. Now, I still think that's only talking about SIV, because they haven't really touched on 1AA-B, which the current system is actually invested into state treasury bond. Now, we haven't seen anything here. I think the media reporter is really mixed up. So that's what I'm saying. There's a lot of ambiguity there required to be verified. The total investment amount of investor program will be increased from 1.5 million to 2.5, and the compliant investment fund will be applied to element of scheme. So I think the 2.5 will still remains in the state treasury bond. I'm not too sure whether they require those funds to actually allocated to PE or VC or private equity and things like that. This means that at least half the investor or significant investor visa will made into startup and emerging companies. So 2.5 million for significant investor and 1.25 for investors. So, that's very interesting. This required to be further verified. Now, if we follow through this, that means originally the 1.5 goes into treasury bond. Now, bear in mind the news article hasn't even mention state treasury bond. Now the 2.5, half of that required to go into a VC and the emerging companies. Now that's obviously putting a risk on the investments and in order to boost the Australian economy. So again, whether or not that has been actually verified, because if they should come out with a better chart than what they propose here. Anyway, the change will ensure that there's more fund support around tech firm and growing companies. Over 15.9 billion was invested in, so that's the same as the previous news. Australia is extractive. That's all the statement made by Minister of Immigration Alex Hawke. The Australian Investment Council has been pushing for these changes several years. The chief executive said that the important flow of capital to support fast-growing businesses, increasing VC venture capital and private equity components, which will clearly have a path of permanent resident significant investors are likely to continue to invest in Australian businesses for long term after they have met their visa requirement. These are small, medium-sized businesses that will generate real job and the growth. So anyhow, after we digest these 2 news, obviously, as I had said, they are ambiguity and information required to be verified, because they haven't touched on 108B, whether we know that they increased the fund requirement from 1.5 to 2.5, but where's the component for state treasury bonds? Do you still require to invest into state treasury bond? That's one thing. Now, polling is it confirmed that 1AA-B can transfer into permanent residency after 3 years of investment compared to previously 4 years in a treasury bond? That's a question mark. And what about SIV, the 5 million? It's still going to be 4 years, or they drop down to 3 years? Seems to be from the first news. It says it's dropping down from 5 years, but that statement, I think that required to be corrected, because there's no BEEP program required to go through 5 years in order to actually transfer into permanent residency. Anyhow, what do you think? I think there's still a lot of ambiguity. If you agree with me, leave a comment right down below and give me a thumbs up, and also share your video with all your friends. Thank you very much for watching, and I'll see you next video. Goodbye.